Good afternoon, Quasar Markets Live. You have your host, Howard Hondo Greenberg, here for our Crypto Corner, our daily look at the world of crypto, what's going on in Bitcoin and the larger digital asset space. We'll look at regulations, we'll look at what's going on with miners, we'll look what's going on in the markets. We'll look what's going on in the news in general. So we're going to spend about a half hour Monday, Wednesdays, and Fridays taking a deeper dive into crypto. I will say a good portion of the show will be spent on Bitcoin. I am not a full Bitcoin maximalist, but with that being said, I do believe that Bitcoin is not matched by any other crypto, and for a bunch of other reasons, and there'll never be another Bitcoin like it. That's not to say that other projects don't have a good, leg under them. They don't have good fundamentals. They don't have good this. I am a big fan of a lot of projects, but Bitcoin is the only one that has a chance to be, the reserve currency of the world. Let's face it. So, let's start with that. Right now, I was looking at the crypto fear and greed index. We're right about 659, just leaving neutral into greed. If we look at that, what I was more taking a look at here is we are getting into a sort of similar set here to what we saw before our last move up, right? Bitcoin has seen itself in this range here, of that 25, 27 range on and off for a couple of months. We saw that here back in, the end of 2022 before we saw the prices start to move up. So as we're seeing the fear and greed move up here nicely over the last, 6 months, and I'm going to bring this to January here of this year. Come from about Christmas, you can see how the fear and greed factor has been playing out and how we are making that nice resurgence here. Last time we made a resurgence like that and again, we bottomed out somewhere in that 29 area before moving back up is when we saw Bitcoin's price move back up. So definitely something to keep an eye at. As we go through the news that sort of matters to me, one of the biggest things on the radar right now was that the SEC on Friday greenlit or approved options to be traded on BlackRock's spot Bitcoin ETF, IBIT. So we will soon see options actually available on the Bitcoin spot, which is great to see. And the SEC said it's approving the world's largest asset manager on an accelerated basis to list those options for the iShare Bitcoin Trust, which is the ticker IBIT. So the commission is publishing this notice to solicit comments on amendments 4 and 5, blah, blah, blah. But it is a big deal. A lot of people have been waiting for this. I know I have been waiting for this. It really allows you to use a much more sophisticated trading toolkit when trading Bitcoin now, hedging iron condors, butterflies, all kinds of things, broken wing butterflies, Scott Bauer's favorite, the Texas wedge, Texas hedge. There are a few different things you'll be able to do. So very excited to see that, and it shows again the retail adoption or the institutional adoption, that's coming to the Bitcoin space. The more that TradFi is getting involved, and you're going to see that there's a theme to that here in the news today. Another big one for me when it comes to adoption is where are we going to see this crypto held? How is it going to be held? What's going on there? So let's see here. Why is that not pulling up? Sorry, I'm having a little bit of a problem here. Okay. So let's pull up Bitcoin's price because that's what everybody wants to talk about to start off with. You can see we're at about 63,164 right now. Market not treated so well today, but we're still right in that range here. I will point out, the key things to look at here on Bitcoin if I pull up the daily chart, or at least the things I'm watching. Right here, you can see the highs that we got up to at the end of August. That's where we got rejected. So right about that 65 level becomes our key area to watch right now. Any kind of approach up there, can we break through? We haven't been able to get above 65 since back here at the beginning of August, and even that was a pretty short term, 15 days we spent above it, and that was it. So we're testing it. This is, you can see this has been a 3-part process here. Made the first sort of reverse trip right here in between April of 2024 and July. Then we made another round trip here. We didn't make it as far back up on this one, but you can see the W formation playing out still. So still positive in our price action on the daily chart in general. 65 is the key spot to keep an eye on. And what I'm also looking at here is some Fibonacci levels. If we do see a retracement, whoops, hit the wrong one there. What are the levels we should be looking at here? In that case, we're looking at about 62,021, 62,021 as the first key support at the Fibonacci level. I like that because it shows here that's about the same spot. That you can sort of measure out here. That would be the zone that I would be looking at here that we're going to have to work our way through in between that 64,350 area and that 65,500 area. I think we're going to see a lot of sell-off in that area. We'll see some, things there. Key point I also want to bring up, we talked last week a little bit about the fact that the short-term holders, the cohort of folks that have been holding Bitcoin for somewhere under 6 months, was holding that at a loss, because we were below that 63,000 level. So we got above that. So what's really positive to see, and that's why, I'm not surprised by the choppiness here, right? We know that there were a lot of short-term holders that were underwater until they got to that 63 spot. What happens is once it gets there, we see a lot of sell pressure into that. And now we'll look and see, do we boomerang up on our next one, or do we see a healthy retracement first before our next step up? That's the magic question everyone's asking. A couple of things, again, on the news side that we sort of have to look at if we want to talk about that is, the immense amount of cash still sitting on the sidelines, right? And this article is more in the way that it discusses more about the stock market and how we could see a big move up in the stock market based upon the fact that there is a lot of money sitting on these brokerages in high interest earning accounts. So Robinhood, for example, started offering 5% APY to its gold subscribers. Online brokerage Public was offering 5.1. Webull had actually 7 if you used a new customer along with their APY. So there was a lot of cash sitting there. And normally they see that cash under about 10%, and they're seeing cash levels now at 25 to 30%. Well, why is that important to the crypto market? Because those three exchanges or three brokerages that I just mentioned are also active in the crypto, especially the Bitcoin business. Robinhood, Webull, E-Trade's another one. Busy, so that's money sitting on the sidelines that might start to get allocated as investors start to say, you know what, that 5%, maybe they don't get offered that. Those rates go down. Now they're 3, now they're 2, isn't as exciting. So we could see that hit from there. Another interesting article that came out in regards to that was from the blog talking about how Bitcoin ETFs are set to attract liquidity as these IBIT options come. So again, what we're looking at is the ability, for, more sophisticated traders, and like it talks about, it's going to attract more liquidity. And this was from Eric Balchunas, who is Bloomberg's ETF expert. And he said retail traders typically use options for speculation, while larger institutions use options as hedges. Bitcoin has a massive retail following, which means it is likely to be more speculation in Bitcoin ETF options when compared to ETF options on equities. And that was according to a market structure analyst, Dennis Dick. Counter to common opinion, options actually reduce volatility. Dick told the block in an email, as open interest rises, it creates natural buyers and sellers on both sides of the market. This thickens up the market and increases liquidity, which therefore reduces volatility. The things that I want people to take away when it comes to what are the options going to provide, it's going to be a couple of different things. It's going to mean that it's more attractive to family offices, to corporations to maybe hold on their ledgers, for hedge funds, more whales, more pensions, 401ks that can get involved in a couple of different ways. They can get involved now maybe because there were limitations to their Bitcoin exposure by how the rules and regulations of their funds or different things were set up. Now this is an actual, traded on the NASDAQ product, so it is available. And this would be on CBOE, available for it to be traded by a larger spectrum of people. What it also means is, companies like MicroStrategy that hold large amounts of Bitcoin now can use sophisticated trading techniques to hedge against losses while still holding that Bitcoin. So again, we could see volatility start to shrink up a little bit. What is that also going to do? Again, this starts that cycle that we talk about. And what happens is it's cyclical. What happens next is that there are more hedge funds that are interested because now volatility, a little bit of the craziness is taken away. You're not worried about a 20% drop in a day because of these retail traders using too much leverage in the spot perpetual futures. And hopefully we see a more educated trader coming in, and with it getting put into CBOE and things like this, hopefully we'll see more education like we try to provide here at Quasar Markets, allowing people to learn how they can safely invest in the cryptocurrency markets and hedge against holdings and long-term holdings and as such. So, definitely good to see that there. Sticking towards the big guys, it was brought to my attention from Scott Bauer and Charlie Moon at Prosper Trading today about a little bit about, they're saying how Bitcoin, BlackRock's buying up everything they can. There is a yes and no to that. What is buying is IBIT. So this isn't necessarily Bitcoin buying for their own purposes. So I do want to warn that. I don't like FUD. I don't like false information out there. FUD, fear, and uncertainty. Which is basically a lot of issues in the crypto market. Important to point out that you can see right on these that it is IBIT that this is the wallet attached to, which is their ETF. So, it shows inflows, which is a big thing, and that is still important. So I don't want to say that that isn't important, but if I'm looking at that, I then want to match it up to some more information, and that's what we try to provide here at Quasar Markets. more information. This is a great site, farside.co in the UK, where you can look at Bitcoin ETF flows very easily. And if we look at November 25th or 24th yesterday, you can see there was $136 million in inflows into crypto yesterday. So, we saw a big move in yesterday. And you can see, again, IBIT, which is the first column, had to buy about $100 million in Bitcoin, which would match up with those purchases or the wallet movement that you saw there. What I will point out, 135, one of the better weeks here. This is the month of September. And you can see we started off really weak first month. We had some losses here of about 170 million in outflows. But since then, we've had a pretty good move to the upside overall. Right now, there are about $17 trillion, almost $18 trillion being held by these ETFs. So positive there. We're going to come back and look at some of the other stuff on here, but I want to stay with Bitcoin and what I'm talking about here. Another thing that they were bringing up today is that, the number one wallet out there is Satoshi's wallet, the wallet that hasn't been touched in years, and has long thought to be abandoned by Satoshi, whether that is a person, a group, whatever else you might say. But that wallet holds about 1.1 million in Bitcoin. After that, we see that Binance has the second largest accumulation of Bitcoin at about 673,000 Bitcoin. And then next comes all of the different entities, as you can see. And ETFs are starting to catch up. I do point out U.S. government holds over 200,000 Bitcoin. Remember that. That's what they've seized. Chinese government not far behind. But you can see the major holders here. Binance, the exchange. Then you have BlackRock, Fidelity, Grayscale, three of the ETFs, MicroStrategy, which we know Michael Saylor and their mission to sort of corner the market, in my opinion, on Bitcoin. You have the U.S. government, the Chinese government, a couple of other exchanges here in Bitfinex, Kraken, and Robinhood, and then another of the ETFs and BlackRock. So ETFs combined holding about 916,000 Bitcoin, so almost catching up to Satoshi. Not that it means anything, but it just shows you how these ETFs are really moving. It was never thought that could be the case. I did point out about global liquidity. It's sort of tough to see this chart right here. Let me blow this up a little bit here. There we go. This was showing about, what is the global liquidity out there in all markets. This isn't on, something from crypto. And you can see how it's been really moving up since July. So again, a lot of money sitting on the sidelines that could be released into the crypto Bitcoin world. So it's one of the reasons that we have so much bullishness and why we see us moving from sort of neutral to, it looks like pretty soon here, into back into the greed area of crypto, where we see FOMO take over. What else did I have here for us? Sticking with BlackRock, their head of digital assets said Bitcoin is risky, but still a risk-off asset. So, for years we talked about Bitcoin being, digital gold, but we haven't seen the narrative necessarily play out, right? It hasn't been when, times get tough, people go to Bitcoin yet, like they do to gold. But, part of that is that it just hasn't hit the maturity yet to get to that level. It's still very correlated with tech stocks, very correlated, in my opinion, with the QQQ, more so than a risk-off asset. But I think what you have to think about when you're saying, is Bitcoin a risk-off asset? what is your time frame? If you're looking at the way that I look at about 80% of my Bitcoin holding, which is this is my retirement or even hopefully better, what I can leave to my the next generation. Um, that's what the goal is to do, is to pass that on. And in the long term, I think Bitcoin is very much a risk off asset. But it's going to take a while for that maturation to come. Again, remember, we're still very, very early in the life cycle of Bitcoin and crypto and blockchain. And, that's some of this stuff still has time. It has to play out over time. It isn't going to happen overnight. So just something to think about there. Speaking of options, and remember, CME does have options when it comes to the crypto market right now, but they are not what you think of. They're not the options that we see. They're weekly options, and they're very expensive. Even their minis are expensive to play around with, and you can't necessarily buy them directly from your, out of Robinhood like you will be able to there. So with that being said, we do see about 8.1 billion in aggregate exposure that is going to expire. That's a pretty big week here. The neutral to bullish option holders are well positioned to capitalize if Bitcoin stays above 63. So, and we do know the bears have enough motivation to try to get it below 60 to cause some pain and to hit where they have their sort of holdings here. And we see that right now there are call options of about 4.9 billion and about 3.2 open interest in puts. So again, a bullish outlook right now on the expiries we've seen this week. Crypto traders often lean bullish, so the excessive optimism reflects in bets on 90,000 and higher. I mean, you see some people put some crazy, but I will say again, a lot of times what these higher marks really are hedges that are played somewhere in, although some people do make those YOLO trades for some reason. And what we see is if we end up closing this week between 57,000 and 58, the outcome favors the bears or the put sellers by about 250 million. If it falls in between 58 and 60, which is where the bears are going to try to push it over the next couple of days for sure, that would get it roughly neutral. And if it finishes between 60 to 62, outcome favors the bulls by about 550 million. And then I'll point out that if it finishes above 62 and below, in between the range we've talked about, 62 and 64, it favors the call buyers for about 1 billion. So it gives a significant reason for some of the folks playing in that perpetual option games to try to move this to keep that mark at least below 62. So again, if I'm looking at short term, where am I right now? I'm at 63, 170. I really want to make sure that I'm watching out here, because I do see on a short term where they could try to pull it back down towards that 60 level. Here, which would be about the 0.382 retracement on the fibs, would also be a healthy retracement there that would hold up on the technical side too. So keep an eye out for that. Did see again, Crypto Quant says Bitcoin supply and profit level signals potential for further gains, like we talked about, as Bitcoin's prices increased nearly 8% since the FOMC cut. The supply, or the amount of Bitcoin that's in profit on a 365-day moving average, is, it's crossing that level. And that tends to be where we see, again, a lot of bullish movement from that spot. So the question is, do we see our next leg up from there? And according to the Crypto Quant blog post, the supply and profit level often acts as an emotional benchmark for investors, serving as a crucial support or resistance zone. When the price exceeds this level, optimism tends to rise. If it falls below, selling pressure may increase. So again, we're really at that inflection point here. What happens in a time frame is, sort of the question. Do we see the bears able to pull it back down this week in the next couple of days to make their pain level a little bit better on the options expiry that's coming? Or do we see that the fact, again, that the fear and greed factor is moving up, getting ready to move into greed? Does FOMO start to kick in a little bit? We know that it can, right? And does Bitcoin make that next move up? I mean, it does seem like it's coiled up here. Again, it's coiled up pretty well here over the last 5 or 6 days. It made that big move up, Thursday, Friday of last week. And then we were able to set higher highs going in. Even yesterday, we just missed it. So now I'm looking at, for me, do we stay above a lower low? So as long as we stay above 62,701 today, in my opinion, we're still coiling up, and I'm still staying in the bullish camp. Again, I am long-term bullish. I actually short-term in thinking, and when I say short-term in today, tomorrow, think that they try to push back towards that 62. So I am looking for something sort of resembling this, where, we come back here through about Sunday, Monday. And then we make our next move up to challenge the liquidation spot here. So that's what I'm looking at when it comes to Bitcoin right here. Let's talk a little bit more about crypto in general and not just what's going on there. A lot of talk, about crypto. It's been in the news here in DC and around over the last couple of days, especially because there was just Gensler and his whole crew was in front of the House Financial Service Committee, a committee that, I've watched a lot of their committee meetings because they do have a lot of the crypto folks on during the time, and have Gensler on a lot. It's headed by Patrick McHenry, who is a very pro-crypto congressperson. He is retiring. He is out of North Carolina at the end of the year. And then to the other side of it, we've had some skeptics on there. And under the last regime, Maxine Walters was the ranking head and she is the ranking head for the Democrats. And they have been trying to get this stable coin legislation passed as sort of the first thing on there. And it says here, a key Democrat on the House Financial Service Committee used a hearing on Tuesday as a chance to push for an 11th hour compromise on stablecoin legislation. The hearing also saw Republican members hammer Security Exchange Commission Chair Gary Gensler, and I did watch it, and they did go at him, especially McHenry, but there was a large swath of them that went after him, and for good reason. But Maxine Walters, what I thought was important is she said, it's time to get this done. We're running out of time to pass this. Waters said she and McHenry had previously worked for months on a compromise bill on stablecoin regulation, but a bipartisan effort hadn't crossed the finish line. And with the congressional session waning, the opportunity is dwindling. But there is definitely a movement there for that to happen. So we're going to hope it does. Stable coins are a big part of the crypto ecosystem, and I think they're going to become even more and increasingly in a part of the TradFi system, whether it be USDC, USDT, government CBDCs. We're moving to a digital future, and we're seeing that. I personally, for those, and Quasar don't know, but my views on this are, well known in that I don't think in the U.S. we'll see a federal digital dollar, as you would say. I think that we will see proper regulation of a stablecoin industry where providers that are transparent and follow the proper rules and guidelines set in place by a multitude of regulators here in the US, the SEC, the OCC, the CFTC, FINRA, and others. But we are getting to a point where a company like Circle, and I do have an article here that sort of talks about the difference between Circle and Tether, and how Circle is looking to become, or is aiming to own, the crypto compliance space. And they have launched a new compliance engine that is designed to help businesses meet regulatory requirements through customizable automated compliance checks. The feature is integrated with Circle's infrastructure, eliminating the need for separate third-party solutions and streamlining the compliance process for companies operating in the digital asset space. And part of the reason I don't think we'll see a federal dollar is I don't think there's going to be a need for it. I think that they're going to find that products like Circle that are looking to be compliant, that are looking to work within the guidelines, and work with regulators, are going to provide a great opportunity. Part of the other reason for my reluctance to see a digital dollar is on two fronts. Number one, surveillance. Once you start to get into CBDCs, as we've seen in China, they can try to control how the flow of money is done. And, I've said it often, the U.S. government needs to know if I buy $1 million in Bitcoin. They don't need to know if I buy my Starbucks coffee with a fraction of a Bitcoin, right? So what we're going to see is surveillance is a worry that the government, especially Congress, has shown, is that they're worried about too much surveillance, of banking and that. So that is why I think we'll see a private-public partnership work together. And when I say partnership, I don't mean that one will be designated as like the U.S.'s official partner. I mean more that they will fall under stringent regulation, and the industry and the people that are smart in the industry will move in that direction. Because what it does, if it's not a U.S. made thing, and where we see a lot of use is across the globe in emerging markets where there isn't access to banking the way that we see it here in the U.S. We have a very U.S.-centric view sometimes I talk about, and we're used to seeing banks on every corner and ATMs, and have products like Venmo, Cash App, and others that make it easy to do so much things just off of our cell phone, and never mind off of computers, that we never even have to go out to do our banking. That isn't the case across the globe. So, this digital infrastructure that's provided in the world of blockchain technology is very attractive in emerging and developing countries, and also in countries where inflation is really rampant, right? Brazil, Venezuela, Nigeria, Kenya, some of these countries, we're seeing that people are holding stable coins as a proxy for the US dollar, so that they can hedge against that triple-digit inflation sometimes in their countries, and that it's easier to access these things if they're not actual US dollars. There's a limit in many countries to how many dollars you can hold, and this provides that ability for one to hold it without holding it, so to speak. So, it makes me more comfortable with the dollar being the reserve currency of the world when it has the ability to be used better across the globe. So it's always been something that I do look at. We are going to wrap it up here today by talking a little bit about Ethereum, because I do know I've had a lot of questions about Ethereum and what's going on, and I do think there's a few things that you need to take into consideration, and this is one of them that I saw here. I thought this was an interesting article that talked about Matthew Kimmel, who is a digital asset analyst for CoinShares, which is one of the ETF providers, and they were talking about Ethereum, and I often say, while Bitcoin is the one you have to hold, and Bitcoin I talk about digital gold, or your reserve currency someday of the globe. I often talk about Ethereum and say that it's the Apple of the blockchain space. And what I mean there is Ethereum is the blockchain that so many different applications and other blockchain projects are launched on. And that, while it is different than Bitcoin, and, I explained that, is, to me, Ethereum is the second most important cryptocurrency to hold, because it is, like I said, to me, it's like Apple or Amazon. It provides the place where others do all of their business. And we saw that during the DeFi craze, when we saw a lot of borrowing and lending and yield farming and things being done and still being done on Ethereum. We saw it during the NFT craze. A lot of things, if they want legitimacy, they have to be on Ethereum, or maybe one of the L2s. And what was supposed to move the needle, and a lot of us had thought that, myself included, I talked a lot about this, that EIP 1559 was going to be a game changer. And what it is that EIP 1559 takes a percentage of the transactional fee that is paid on each block of Ethereum, or on each transaction, and it would burn that forever. So sometimes if Ethereum was really rocking and there was a ton of transactions going on, especially like during the meme coin and the NFT crazes, what we would see is Ethereum would actually become deflationary because of the volume of transactions being done on the blockchain and that burn rate. But we have seen that that is not the case anymore. And the reason for that is a double-edged sword, as it says here, which is the rise of level 2s, of layer 2s. And what does this mean? Again, one of the big problems Ethereum faces, or faced, is its high transaction costs. For those of us, again, trading back in the 2020, 2021, if you were trying to buy a new meme coin, or any coin that was an Ethereum and ETH ERC20 based token, even let's say Chainlink, and you did that on a decentralized exchange like Uniswap, the fees could be immense, anywhere up to $100. So it was really something to keep an eye on. And it really was a problem. And the advent of layer 2s is what has been pushed on as the way to scale Bitcoin for right now. They're working on scaling, but that's still probably 18 to 36 months away. And this layer 2 is going to be the transactional layer, where we saw a lot of these dApps move to NFT creation, meme coins, things like that. That could be settled there at a cheaper rate and then put onto the Ethereum blockchain on the roll-up. And we saw a lot of that, and we've seen it take off. So what has happened is the amount of transactions going on Ethereum and the amount being burned through EIP 1559 has definitely changed the game. And now we're not seeing as much there as we were. So what we're going to need is that next level of adoption to take off, and for those layer 2s to scale so much that we start to see the transactional value of the burn happening on Ethereum pick up. I also want to point out that there's still a lot more uncertainty when it comes to Ethereum on the regulatory front. And I don't mean necessarily Ethereum itself, because that has sort of passed the test, and now that there is, spot ETFs there, the SEC worries about the SEC not nearly as much as it was. So we are definitely, moving in the right direction there. But again, like we talked about, the hundreds and thousands of projects, ERC20 tokens that are built on Ethereum, still have to go through this regulatory uncertainty. So until we can start to see more rules in place, like we're seeing in Singapore and Hong Kong, to an extent MICA in Europe, hopefully following us here into the US, providing those regulatory you know, certainties will allow more investment into those. It will allow us to get back into the world of DeFi, which I do think will take a huge jump back up once some of this regulatory uncertainty gets cleared up. That's when we see that next move up by Ethereum. So again, you know, short term, I am not necessarily the biggest bull on Ethereum. Long term, definitely a bull when it comes to Ethereum here. So, you know, I'm not going to take a look at the Ethereum chart today, but we will take a look at that moving forward a little bit more and talk a little bit more about some of the other alts. I'm a big fan of others out there, and we'll go through those. So that's a look at what we're seeing across the Bitcoin market, the crypto market right now. For Howard Greenberg, I want to thank you for joining me today and allowing me to bring you up to speed on what's going on in the world of crypto.